This November 19th and 20th, MFG is hosting the Media Capital Summit in New York City. 2 days built for Series A and B founders, scaling consumer brands into household names. Join top investors, media publishers, and select brands to explore the most diverse stack of strategic media capital through curated dinners, roundtables, and high-impact networking. Seats are limited. Apply now at mediaforgrowth.co. Brand applications are now open for selection.
Hi, everyone, and welcome back to Media Capital, a podcast where consumer investing meets media innovation. Today, we're thrilled to welcome Elle Lanning, President of Investments at Camino Partners. At Camino, Elle leads investment strategy and execution across asset classes with a focus on the firm's direct investment platform. A former Kind executive who helped scale the brand from $20 million to over $1 billion in sales, Elle brings an operator's lens to investing. Under her leadership, Camino has partnered with standout brands like Belgian Boys, SOMOS, LiveWell, and Berries, helping founders grow with purpose and impact. In today's episode, we explore her journey from scaling Kind into a global powerhouse to leading investments at Camino Partners, diving into what makes purpose and margins truly defensible, how consumer investing has evolved, and the lessons from building brands that last. I would love to kick things off by hearing your story because you've spent time inside one of the most recognizable brands, Kind, and now you're also shaping the next generation of companies, of brands through Camino Partners. How did you find yourself at the intersection of building and scaling and investing in consumer companies?
I would say, as you acknowledge, my journey or career path is very nonlinear. In a lot of ways, I actually take that back to my childhood and the baby, right? So the youngest of 3, and I had a very business-oriented family. And so I found myself as this young child with this crossroads of either trying to figure out what it was they were talking about or being completely bored. So I obviously took the path of trying to figure out what it was that my dad and brother primarily were talking about at the dinner table. And I think that formed this early sense of making sense of things. And as I then moved into the career stage of my life, a lot of that became focused on just a fascination with the consumer mindset, the plethora of choices we have, how we think about and frame those decisions and then ultimately make them. And so the beginning of my career started as a consumer marketer, really, again, trying to take that understanding of consumer and then translate that into marketing campaigns that would influence those decisions. And I found I always felt more connected to the work when it was products and services that I felt really good about influencing the consumer decision to make for purchase. And I was fortunate in that time to work with a lot of incredible brands, Kashi, Bare Naked, Honest Tea, Pinkberry. And in that time frame, I also found that I was most connected to our founder-based organizations when I could understand the initial vision, inspiration, reason for being for the company, which, I don't believe there's any replacement for that than the founder story themselves. And so I found that I was drawn to those clients. I was in the marketing services side, so on the agency side. And I found actually a lot of my colleagues ran from those clients. And that was framing for me in the sense to focus on that construct of a business. And I was fortunate enough in that time frame then to meet Daniel Lubetzky, who is the founder of Kind. And this was a time where I met him when the business was doing about $10 million in revenue. And he was a founder, I would say, unlike any other I'd met, even though I'd had the opportunity to work with such incredible founders. Just the way he saw the world, the way he thought about things was entirely different. When I was first meeting him, you asked the typical question to any founder CEO, what keeps you up at night? The 10 founders before him that I'd worked with had something to say about their business. He would talk about nuclear proliferation, dehumanization. Like, his mind was always focused much more on like the meta and the macro. And I think that actually influenced a lot of the way we built and thought about Kind and ultimately the scale we were able to take it to. Now I'm able to do a lot of that in partnership with great partner companies as we shepherded Kind to where it is today, and now are trying to take those learnings and experience along with flexible capital and put it to work behind great teams with great products and services.
Ellie, you joined when the company was at 10 million, I think you said. It grew to $1 billion company. And you mentioned purpose and you alluded to purpose. And I read in some of your posts as well, you do cite purpose and margins quite often as top values that you think would make a brand defensible. I'm curious, just going back to the Kind days, because Kind is often cited as a purpose driven brand. Those words, I think a lot of brands these days are using that a lot, but what does it actually mean for you? Or what does it look like behind the scenes when purpose drives growth?
So I think purpose can be defined very broadly. And I would say if I take the Kind example, I think we actually had a real duality of purpose. Purpose in the product itself, which Daniel really formed from a place of a problem he was experiencing. You have to go back in time to really, because now we have a plethora of healthier options, if you will. But he was late 1990s global entrepreneur traveling the world and could not find healthy and convenient options. And so I would say the first form of purpose that was embedded into Kind was truly in its product and providing a healthier solution for people. That was critical to our success, right? Without that, the other part of our purpose paradigm wouldn't have worked for the brand. And I say that in a very careful way because if you go back to when I met Daniel, again, he's this entrepreneur selling 6 flavors of fruit and nut bars and doing about 10 million in revenue. And I'm thinking I got the call because I had worked with more scaled brands at that time in the food space. And when I first met with him and I was trying to understand his vision, because if I'm going to help him translate that and be the marketer of it, it was important to really get at and understand. And the first things he talked about were breaking down barriers between human beings, making them see their shared humanity. In a lot of ways, very separated from the products and things that, by the way, I at the time knew very little about how to do. But I saw really the authenticity in that as the purpose, which, if you know a little bit about his story, he's the son of a Holocaust survivor, and his dad very literally was saved by the act of kindness in a concentration camp. And the purpose for him it's in a lot of ways like existential. But I saw an authenticity in it, which I think is very important. We talk a lot about you can't manufacture purpose. You also can't take a less than kind of product and service and make it better with purpose. Like all parts of the equation have to be working independently and then hopefully working better together. And I think an authentic purpose, especially today, is like sniffed out pretty quickly. And so I think
Yeah.
purpose can evolve and it can change over time, but the origins of it have to be very true. And I saw that with him. But if I pull that apart, I think there's a lot of even teams that we're invested behind today where the purpose isn't necessarily as existential as maybe Kind's was, the idea that like connecting humans with kindness, but that they wake up with a sense of what they're building, with motivation behind a solution that they are bringing to their core consumers. That brings ease to their life. That might bring joy to their life. And I don't think it always has to be this overly altruistic thing, but I think you sense it when you feel and see that connection within a team. And you see it in a reason that they're each waking up every day and trying to move this ball forward, because anyone who's been in a startup or a challenger brand or business environment knows just how hard that is.
I completely agree. And I think these days, Kind is definitely one of the early companies to start this purpose driven trend and to be also at really the start of all the healthy ingredients, healthy eating that I think right now there's a proliferation of products. And I think we're going through a frenzy of protein products. There's protein in pasta, there's protein in everything right now.
There's protein in water.
exactly, water infused with
Yeah.
what kind of adaptogens, proteins, etc. I think it's also easy, as you said, to spot, I guess, where purpose is misused or overused, greenwashing very often, especially when it comes to impact and meeting those sustainable goals and trying to add different logos to the website. And you work with some fantastic brands and you're sitting on the board of some fantastic brands like Belgian Boys. We talked about it earlier. And I know Camino Partners invest usually at a growth stage, so a later stage where these companies already have a product market fit. And I think you could probably trace that purpose and the narrative over time. But when you first looked at the companies that you were working with today, is there a way to measure purpose when investing in these companies? I know it's quite an intangible asset, if you like, but where do you see that reflected perhaps in other KPIs in those companies?
Yeah. I think that's difficult to answer at such a high level because, again, I think the way in which purpose is defined and articulated could be very different. You spoke to Belgian Boys, and if you look at that origin story, Greg, the founder, and his wife, Anouk, who's the CEO of the business, they are Belgian. And so their purpose and their motivation was really to bring food from their culture, bring experiences from their culture. They found themselves both living in the US in their college, post college life. And so to share their culture through food was a way that they found new relationships in the US as they were settling here. They found like relationships around their food and the food from their culture to be very connecting. And so that it was really what is their purpose, right? And I think that they've found over time how it's evolved. We know that our consumer for that business often cases is the kind of young, busy mom. So chaotic household. Anouk is that person, right? And the moment of joy that you can have around that breakfast food in the morning and have a quick connection with your family in what are days of chaos gives them a lot of, them and the team a lot of reason to wake up. And so how could you measure that? That's going to be
Yeah.
probably households touched, right? The more people that they can bring that quick connective moment in the morning to, that's them fulfilling their purpose. At
Yeah.
Kind, we had a lot of challenge again because we had this duality of purpose both in the product but then purpose in the work we did through what we called at that time the Kind movement, which was really broader community work. And so in that instance, there were quote unquote measures, and you never get it right. But I think just the fact of understanding it, trying to define it, and trying to track it is a worthy cause.
Yeah, and Kind, exactly like you said, Ellie, I think it's a great example of a company that could balance purpose and commercial output and financial success. I'm curious because we started talking about your journey into Kind, and obviously right now you're working as part of a Camino Partner team. You have a very interesting background. I'm a marketeer as well. I'm an operator. I think some of the most successful people actually have very different backgrounds, a variety of reasons how they got into this space. But I think being an operator and you having that very rich marketing expertise, I think it might perhaps influence you how you assess these companies as an investor today. How did that transition was like for you from Kind to Camino Partners, and what do you look for in these founders as an investor because of what you know as an operator?
I think it definitely shaped both how we as a team look at different businesses and opportunities. And I would say how we interact with the prospective partners as we're getting to know them. I think I would tell you I crossed over from operating into investing in 2022. And it was a very weird time in the market. And I had come from 12 years of building and scaling Kind, where we were profitable and cash flow positive from day one. To the degree that we ever raised money, it was a strategic exercise and very elective. It wasn't, the business didn't require it. And so I crossed over in 22 when the market had just come off of this like free money era. So I think I had a lot of empathy, I would say, for entrepreneurs and founders at that time, because for the years prior, they were being encouraged by an investor community to really grow at all costs. And when cash is free, like, why don't you go out and buy more consumers? And which is fundamentally, we disagree with that. We talk about sustainable and scalable growth, and consumer businesses especially need that. But so I came into this marketplace, and if you think about it, in 2022, the market had totally changed. Valuations had come down. There was still this, I'll call it valuations gap between the operator community and the investor community. And so really the businesses that didn't need to raise, they weren't having conversations at that point. And so the businesses that I was interacting with at that time, it painted this view for me that consumer businesses can't make money anymore. And that wasn't the case. The ones that had the choice and that were running sustainable growth models, they weren't going to talk to anyone about raising, because why would they in that market? And so the operator to investor at that timing, honestly, was a little bit scary. Now, I've now seen that through some changes in the market. And what I would say is at Camino, we're very intentional about building complementary thinking within our team. So I come with much more operating experience, but then I'm looking to partner that thinking with people who have more investing experience, such that the combination of our views and vantage points lead to hopefully better analysis and decision making for ourselves, but then also more value to the companies that we then do partner with. And so where I see it is when we're building a forward model for a business that we're looking at, I'll try to understand with the team, like, what are the underlying assumptions here? And then when they talk about whether that's a distribution growth assumption or a velocity growth assumption, for me, I can make that really real. I'm like, okay, do you know the 10 things that actually have to happen for us to go out and get those points of distribution? Now, how do we feel about that assumption? Is it aggressive? Is it conservative? And so there's a lot of push and pull within our team that I think helps to make it real. The other big thing I would say that it highlights, or where I think it's helpful, is just in the sense of empathy, right? And but if your lens to a business was, and this is maybe not giving enough credit to the broader investor community, but if your lens to a business was building an Excel file for what the next 4 or 5 years of its existence will be, that's very different than if you sat at the navigation panel of those 4 or 5 years. And I say the Excel file was really the output of the decisions made every day. And so I think that also gives us a huge sense of empathy. And that's why in our investing, really the first thing we consider is, do we share the same set of values with these founders, this management team? Because the only thing I can guarantee is that nothing's going to go to plan. And that's going to be in ways that excite and delight us. And that's going to be in ways where we're really set back. And I think a team of values aligned people, certainly when you're winning, it's easy to win together. It's in the challenging moments that you really need to rely on that shared value set to pull each other out of it. And I've had moments with our founders where I try to come to the table and say, the only way out is through, and we're going to figure this out together. If I were maybe more a traditional investor, the disappointment of deviating from the papered plan, I would react to in just a very different way than having been on the side of the operator.
I was about to say on that point, I think it would be great to have more and more investors that have the operator background, or at least have experience as an operator. I think you do start to see just the whole business, and I think growth also through a completely different lens. And I think no matter how many businesses you're reviewing and the projections, as you said, I think it just changes your mindset altogether, being in a business and trying to grow it from a very early stage. And the experiences that you've had, obviously growing kind to essentially becoming a unicorn. You already guessed the question that I was preparing, because it's interesting. You joined, or you made that transition in 2022, and it was indeed a very different time. And consumer investing shifted a lot post 2021. Obviously, you do have that perspective because you're in kind before this milestone. Are there companies, or maybe Are there sectors that you don't think that investors are looking at any longer? Or are there any specific business that you feel like after 2021, especially in the consumer space, that are starting to get more funded and there's more attention on? Of course, AI cuts across
Hmm.
all different sectors, but in terms of the consumer space, what are you saying in terms of getting funded and not getting funded anymore?
Yeah. I came over to invest in at what I now understand was probably the tail end of, let's call it some like tourism investing. And so you had tech investors investing in consumer and with the idea that there's like the expandable margin that you see in tech. And so you saw those valuations crossing over. And then if you were a consumer investor who understood the fundamentals, there was no way you were going to be able to match those valuations. And so you were a bit sidelined. I think a lot of that has settled and cycled out. And in some ways, I think you're now seeing investors focus on where they built their strength and their knowledge. And I think that's ultimately better for the companies on the other end of the capital as well. I think what we tried to stay focused on, and certainly our experience at that time was painted by kind. People were getting a pass. So this cuts across kind of sectors. I don't think that there's a sector that I would say people are staying away from. We try to be hyper focused on the unit economics of a product or a service out the gates. And so I think back in that kind of frenzied market time, that was overlooked. It was like, go find a consumer base, buy your consumer base, work on your cost structure on the back of that. And I don't think that was ever a playbook that we at Camino would have supported. And when I talk about unit economics or gross margin being strong out the gates, for me, that's not just because financially as a business you would want that. To me, it actually signals that there are consumers that see value in the product or service that you're providing
Yeah.
because they are willing, that shows a willingness to pay for it. Versus if you're looking at businesses where, and sometimes, the team themselves maybe didn't even understand this because they were being pumped and pushed with capital to grow. What I would say whenever we looked at businesses where there were several where the unit economics were negative, what we would try to help them understand is like you are subsidizing every consumer purchase. The company's balance sheet is literally paying a portion of the consumer's purchase every time someone purchases your product and service. And that leaves you no money to invest in marketing and team, etc. Or if you are investing, it's just digging a further hole on your profit margin. And I think that you've seen some of that settle out. And today I would say 9 out of 10 kind of conversations we're having, you're talking to teams who are hyper focused on their own unit economics. Like, we don't have a profitability requirement. We need to be able to see a path to that. But so we're willing to talk with teams where they've got strength in unit economics and maybe on the bottom portion of their P&L, they're making strategic investments such that the business as a whole isn't profitable. But if we can align and believe in those strategic investments that they're making, we know that they've got a strong kind of unit economic and there's opportunity to grow that across scale. Those are businesses we're really excited about. And so I think those weren't the conversations or the nature of the conversations we were having in kind of 22, maybe even tipping into early 23. And I think now you're seeing much more of that within the businesses themselves, so focus on that.
I was speaking to a founder, I think this was about 2 months ago, and he was telling me that in his sort of 10-year tenure in a company prior to 21, the word profitability didn't come up once in a board meeting.
Yeah.
And I think that's just a requirement. Now, I mean, it is common sense, but I think it is because it's just becoming the norm. And even founders that obviously know they're far from it, they do find a way strategically to talk about it and present how they get there. On that point, or Jason, Kind has a great retail distribution. And a lot of the founders at Camino Partners, there are physical products, CPGs. How important is that retail strategy for you? And would you invest, for example, in a company that is currently D2C, but do you want to see that retail strategy shaping up in the upcoming months or years?
I tend to think about that as more category specific, right? There are categories or sectors where just more of the dollars do go to e-commerce or online sales. And there are still categories, I think food, even though like food and beverage is still remaining like a in real life kind of distribution. Ground game is really important, right? I think about stuff in the physical availability and mental availability. And so I think distribution for CPG is still very important in the sense that, in a lot of ways, like that's where discovery happens for the first time because that physical availability drives that kind of mental availability for your product. We've talked with businesses in the past where they're purely D2C. I mean, typically investing ahead of seeing if that can translate to retail, we have not done yet. I think if we can see that, they've maybe taken one channel or kind of a key account and started to build a model for and performance, because we say importantly, like it's actually fairly easy to get on shelf. The challenge is getting off shelf. And if you can't get off shelf, you're not going to stay on shelf. And so for our kind of investment thinking and criteria, we really need to be able to kind of see the early construction of a strong performance sales story that then we feel really comfortable helping those teams to think about, sales talent that we could bring to bear, buyer relationships that we could bring to bear. But relationship can't make up for lack of performance. And so if we have a lot of kind of tools to amplify that or relationships to amplify the performance, we might be comfortable going maybe earlier in a retail expansion journey than other investors because of that. But we can't create the kind of pull and the off-shelf performance.
I completely agree. And I think recently there's been a debate that is obviously getting more and more momentum around the changes that are happening right now due to AI and how we discover products information. We're no longer basically going on a website. Everything comes to us by searching. And I think having that mental availability or being physically in a store, I think branding altogether, and in this case, retail, is going to become more and more important in how we discover brands. Obviously, how
Mhm.
marketeers are going to position those brands back to us. Retail altogether as a media channel, I think, is going through a formidable transformation. The likes of Target and Walmart are changing completely their entire taxonomy, essentially, to be able to come up in this chat, Gemini, whichever LLM of your choice search that you're going through. Do you find, or do you think from your conversation with brands, is this sort of a tension right now? Or do you think that branding and especially retail is going to become more and more important as AI is actually taking over?
I think I would say there everyone's in learning mode. And I think one of the things that I talk to our partners and the teams we work with about is I think that's going to be like a true top of funnel impact. So where you drive discovery will change. But for me, scaling a brand, discovery is a part of the equation. But what you really need is to nail the product or service and the price value that you're delivering to market, because the only way to compound and create billion-dollar brands is to have a strong repeating customer base. And that comes from the actual delivery of the good or service. And, that I say you've got to make sure you don't get lost in this shifting discovery landscape and lose the eye on the ball of, am I pricing it right for the market and how the market is changing around me? Am I doing everything in a quality program to ensure that the experience of whether it's my food or beverage or service is consistent every time a consumer parts with their dollar, they're getting the same thing from me or better, right? Am I moving that bar up? Those things to create a true kind of scaling and compounding business in consumer, I tend to find myself sometimes more focused on. When I think about that equation, what I think it will influence the most within businesses is how you think about talent strategy, right? And so like I would be thinking about I want a mix of generations within my marketing team because I'm feeling like a dinosaur more and more. Like I have to force myself to become AI native, if you will. I'm getting to the end of every week and asking myself, how much did I go to Google for something or ChatGPT for something, right? And how do I force myself to shift that over time because I don't want to get left behind? Whereas someone who's just leaving college, their interaction with the digital space is just entirely different from mine. I'm never going to match theirs. They're hopefully never going to convert to mine. I would go to say, if it's relevant for your consumer base, right? Knowing the consumer that you serve remains extremely important for your channel strategy for marketing.
I think we're using AI internally, obviously, through the creative process that we have. Just the creative studio we work with, Particle 6, essentially embedded AI throughout the creative process. And I think it's more of an enabler than a means to an end. Obviously, the founders we are in conversation with, I think the challenge is more on the SEO strategies. Obviously, completely flipped. Websites, the traffic are down, just in general, not necessarily in the
Yeah.
consumer space, but if we look at publishing space, 50% at least, just because of the recent changes. And I think it is, as you said, I think it's a learning process. I think nobody really knows. There's no blueprint. There's no on SEO. I think there's a ton and ton of content out there about how to optimize your headlines, etc. How do you optimize your website to come up in ChatGPT when somebody's asking for healthy protein bars? It's an interesting world to be in. I think as a marketeer, a lot of things are shifting, and I'm curious. It could be somebody perhaps from your portfolio or completely outside of Camino Partners. Is there one founder you think or an operator that you think is doing amazing work, maybe under the radar that people should know about, or perhaps a brand that you really admire?
That's so hard. I feel like Daniel used to, when he would get asked what product was his favorite during our time at Kind, he would say, that's like making me choose my favorite child. I don't know that there's kind of one that I would point to. I feel proud of all of our partner companies, and I think I consider myself today 1 degree removed, if you will, from the operating paradigm. But if I even just think of my dozen years at Kind and the degree of in the early days, it was probably more like plan and execute. And then in the later days, it was like planning, executing the dynamism that the changing times and changing market required, I think has only accelerated. And I look at all of our companies, think of these last several years, like this last 10 months, tariffs, no tariffs, like the amount of planning for optionality that an unexpected circumstance that may come and go in a week that you still may come and stay. I think I look at just how much work each of our teams has to do to weather that and lead through dynamic times, just like we were talking about, like how do you reach a consumer today? That's changing at a pace. I was somewhere the other week talking about how not very long ago it used to be brand set a message and chose how to disseminate it to a consumer. Now brands try to define themselves, but then consumer interpretation and reference to like this idea of brand controlled story, like that's gone. I look at all of our businesses and how they're leading through these changing times and being excited by that versus daunted by it. And I feel, I would say, proud of each one of those teams.
I completely agree with you. I think just being a consumer brand on that verge of a growth stage sort of path and trying to survive and weather the storm that we've been facing for the last 9 months, I think it's tough enough. And I think although there is a consumer comeback, I feel in the last 6 to 9 months, I still think consumer brands are struggling to attract funding. I mean, I think there's overall about one in $16, I think, and across the board, I think later stage companies have a slightly easier life, if you like, but across the board, I think still consumer brands are struggling to attract VC funding. And I always ask this question because sometimes I can understand why, but I'm always curious to get everybody's view on why consumer brands are not getting more attention. If we look into across numbers, across IPOs in the past, 50% of the most successful IPOs come from consumer brands. So I don't know if it's usually some of the growth trajectory, obviously the unit economics, the kind of multiples that you would expect, but we're both in the consumer space. And I feel like there's still a struggle. If you're not AI B2B SaaS company, I still think there's a struggle there in fundraising.
I agree, but I take the maybe counterpoint of view and I say I think that's
Mhm.
okay, because I think one of the impacts, I would say, that I at least saw of the, if we want to call it the free money era, is I think it gave birth to a lot of businesses that didn't need to exist. And you had
Sure.
this universe of, I'm going to build a better brand. And I would tell you, for us, we think brand alone is not a defensible or sustainable playbook. And I think, especially if you look at the food space, like the number of brands where it was like they went to
Yeah.
a co-man network, they saw what could be created and available, and they dreamt that they were going to build the better brand around the widely available product. That's, in my mind, a hard ask to get funded. And we say true kind of product differentiation, reason for being differentiation, with then strong brands certainly on top of that, are the necessary components. And so I think part of probably what you're seeing is a lot of those businesses were born. I think we're going to see a contraction of a number of those types of that kind of archetype of business. But the ones who do, Daniel kind of has this process that he talks to entrepreneurs about, which is the 3 C's. So you have to be the creator, the critic, and then the crusader. And we find a lot of times people might skip that critic step. So creator is you're dreaming big, you're giving birth to the idea, you're unconstrained in your creativity. But then importantly, you need to be the person who flips to become the critic. And you need to be the one who, before you take this thing out into the universe, you break down your idea. You find every vulnerability in it. You critique it. You tear it down. And then you ask yourself, can I overcome those things? And he says, only once you feel you've been able to do that, then you're the crusader and nothing stops you. Nothing stops you. You are waking up every day. You're sleeping probably very little at night, and you are just charging forward with that. And I think if you skip that critic stage, I can tell you on the investor side, it shows a lot. Like when we talk to people who aren't, I'm much more excited talking to founders or teams who talk to me openly about their competition, what they think about it, how they think they're different. Those who can't point to that, it's far scarier for me.
Yeah. And I'm sure you hear a lot of people that claim to have no competition in the market. It's a very interesting compass, if you like, of looking at things. I completely agree. And I think with us as well, for us, a brand, obviously, it is one of the key guiding principles. But at the same time, having a real IP, building a new category, I think category creation is very important to us. I think that also is justified by even more so trying to build real positioning, and having a branding and clear differentiation, especially when you're building a new category, trying to make the case for a new category. I think that's even more important because you need to educate the end consumer. I'm completely with you. I think there's a lot of companies that are struggling also because of valuations, especially the ones that were
Yeah.
not able to raise in pre-2021. And personally, from what I'm seeing and discussions we're having, I think there's another correction probably happening very soon, building on what already started as of 2021.
Yep.
Ellie, I have a quick fire round of questions for you before we wrap up. These are supposed to be short, quick fire questions. The first one, is there one decision that Kind made early on that shaped the brand long term? Speaking of branding.
I would go back to having a meaning that transcended its products.
Is there one thing that Camino looks for in founders that doesn't necessarily show up in a pitch deck?
Perseverance.
We're at the end of the year, so I'm sure a lot of people are starting to put up predictions for 26. If you had to make one about where the conscious consumer space, if you like, is headed in 2026, what would that be?
I think about this concept of kind of brands as a place for community. And I think that the today consumer is seeking that.
I think community, we haven't talked about this, but I think community it's a very strong element to take into account when it comes to defensibility of a
Hmm.
brand. I think a community could, especially in the early stages, I think it could be more powerful than probably any other performance channel or brand activations you could possibly do. It's organic, it's natural. And I think if you build a very strong community around your product, that's where you get the conviction from, right? And you get to test and learn.
Right. Do I have a user base or do I have a
Yeah.
connected consumer? That to me came to life actually with Belgian Boys. The night before I was meeting Anouk for the first time, I have, 9 best girlfriends from growing up where we stay connected every day via text chain. We're all kind of busy moms at this stage. And one of them had discovered her products, and it wasn't like a pancake that she served her kids, right? It was a moment for her kids, and she was sharing that. And then the way that the 9 of us were kind of connecting about the strife of the morning as a mom, as a busy mom, and, things that could help you get around that. And so, like I say, for that type of business, like, how do we make sure that it's finding its way into more of the mom texts? Like, that's not a user
Exactly.
interaction, right? If she were a user of the product, she would have just used it and never said anything about it. So that idea of that ability to have your brand create connective moments for its consumers, I think is something people will be looking
Yeah.
for.
I completely agree. And that's social listening, right? As you said, busy moms in of itself becomes a target that possibly maybe you didn't think about as you scale the brand. And
Hmm.
I think feedback you get from those channels is very valuable. Ellie, thanks so much for this amazing conversation and your time. I'm glad we got to connect and also connect with the rest of the team at Camino Partners. You have a fantastic portfolio, I think very strong investing and guiding principles, and look forward to staying in touch and working together and having you back on in a year from now and see what shifted and what changed.
Probably a lot.
Yes. Thanks so much.
All right. Thank you guys.
Thank you for joining us on the Media for Growth podcast. If you enjoyed the episode, leave a review, follow the pod, and subscribe at mediaforgrowth.com.